A lot of traders get stopped out when trading before price starts going in their direction. What I mean is that if you're trying to buy from this level, assuming you want to buy and you're targeting somewhere around this level as your take profit, but right when price starts going in your direction, price stopped you out before later moving in the direction of your prediction. Or if you are selling from this area, assuming you're selling from this level and you're targeting somewhere around here as your take profit, your stop loss is right above here, but right before price reach your take profit, it just push up again to stop you out before going in your direction. Sometimes you almost feel like somebody is watching your stop loss and they're trying as much as possible to get your stop loss before they take price in the direction. This is simply what we call liquidity grab, okay? And this simply happens because smart money are trying to get as much order as they can before pushing price to the next level to deliver liquidity. Now let's go to the chart and find where we can find these things. Let's start by defining what is liquidity. I don't want us to think anything further than money. Liquidity simply means money, and whenever you hear liquidity grab, it simply means grabbing money. And then it is simply the smart money trying to grab as much money as they can to fill in their order before price delivers liquidity to another side of the market. So let's go into this and check where we can find liquidity or where we can find money that is simply called liquidity in the market. So liquidity can be found where there is an old high, please get this right, or an old low. Okay, now let's assume we have price going like this in this direction to this area. Okay, something like this. We are forming new highs and new lows. Okay, so these areas from here to here, this is your old high, this level. In this area there is liquidity residing, and in this area there is liquidity residing. In this area there is liquidity residing. So we have money residing here. Why is it having money there? Because everybody that bought from here has actually put his stop loss below this area, and your stop loss is money. Okay, so this is simply what we call liquidity. So stop losses are something like this below this area. This is your old low, this is an old high, and people that are selling from here, their stop losses are here. Okay, and what do you think smart money is doing? They already know that the stop losses of people are here, and people that are selling from here to this area are putting stop losses here, which means if you are selling from here and then price move to this place, you are actually buying at an expensive price. And then if you have a stop loss below a buy order, you are simply saying if price should come here, you want to sell. Okay, and then if smart money is trying to fill in their order, let's assume smart money came here with $1 billion. Okay, $1 billion. You know, $1 billion is very huge amount of money. And then if they want to take trade from here, they want to buy, they need to get enough sellers before they can buy at that level. Then there are people that are selling below this place, and it is a bit cheaper for them to buy from there than to buy from here. Okay, assuming you have the price at this area from this level, this place is just $10, then here is $15 or $18. Which one do you think they will prefer? The one at $10. So that is why they grab the liquidity here before taking price up. If you buy at a cheaper price, you can actually make enough money from that than to buy at an expensive price. So this is why liquidity grab happens. Then when you enter trade, they try to manipulate it and have enough order to fill in $1 billion order at a cheaper price and then take price up. Okay, I hope you understand this. If you don't understand what I explained this, you can try as much as possible and let me know in the comments. I will practically go ahead and start afresh and make another video explaining how these things work. Okay, so let's go to the chart and see how these things happen time and time again. You're going to see this happen over and over. This is an old high. Okay, this is an old high at this area, an old high that has enough money above it. So above this level is where the money is. This is where the money is. And smart money will always want to come here and grab this money. Look at it. in the future, smart money came over here, grabbed the money here before pushing price to this area. You can see this happening over and over and over again. I want to find another area where you can find these things happening over and over again. Look at this now. Look at what is happening here. Let's try to replay it and see from this area. Okay, look at what happened from this level. We have an old low here. It has money below it. Old low, it has money below it. Okay, we have an old low here. It has a lot of money below it. This is where the people that are buying have put their stop losses here. You can see all this area is full of stop losses. Okay, so if you are to see this happening, you're going to actually see this happen, and then you will see price will actually come in the future and grab this liquidity. You're going to see it. You can see price has actually came to this area and grabbed liquidity before moving. So people that are buying from here at this area, then they want to make sure that they have their stop losses right here below here, and then take profit maybe above this level. So people that bought here at this area, let me show you that properly. At this area people bought, then their stop losses was below here. Price came and then picked liquidity at this area before pushing up again and then taking price. You can see liquidity has been picked before taking price to the upside. Now you can see this happening over and over and over again, regardless of the direction of the market. Let's find some liquidity grab happening above old highs. Now look at it. You can also find liquidity in something like this, a movement like this, that is a trending market. If you have a trending market like this that brings price to this area, to this area, to this level, okay, above all this area is where you have your liquidity money residing here. So price may eventually decide to push above here and pick all the liquidity. Okay, this liquidity here, this liquidity here, this liquidity here. So all this area is where liquidity is simply residing, that is money. So smart money may decide to pick all the liquidity before actually pushing price downside again. Okay, so to get enough order at a cheaper price and then to fill in their very huge and bulky order, they need to get as much order as they can before they can take price to another direction. Look at what is happening here. This entire movement below here is where you have money residing. Okay, and then smart money came here and picked the money before pushing price upside. Let me adjust it. Can you see where money was picked? Below here, money was picked. Above here, there is money. Look at something that I'm telling you right now. I just finished explaining to you the downtrend that we are seeing. We have money here, we have money here, we have money here, old highs. We can see old highs. Then price actually came and picked all the money here. Can you see money was above this level? This level, let me just adjust it a bit. Money was above this level. Price actually came and picked liquidity above that level before moving to the next direction. Look at this. Liquidity residing above this area. Liquidity was right above here. If we are to replay this, you're going to see what I'm telling you. Liquidity was residing above that area. That was an old high, and there is money here. Let me make it more visible for you. There is money above this area. Price actually came back and picked the money. Can you see? Price has actually picked the money before pushing downward, because every single person that was selling from here has his own stop loss just very tight to make sure they don't lose more money than they can afford. And then price actually came and stopped them out before actually moving in the direction of the prediction. Look at this place. How about this place? Let me show you that. How about this place? Money residing below here at this area. Money residing below here, and actually we can see price has came to this area, picked liquidity before going up again. So this is happening time and time again on a chart. You're going to see it. Now I'm going to show you how to actually stay away from that. Let me show you the last one I'm seeing. We have liquidity residing above this area, and we can see price has actually picked the liquidity above. This is happening time and time again. You can see this on your chart. If you go ahead and check your chart, make sure you check every single chart and see if this thing is happening. Can you see liquidity grab above here? liquidity was grabbed, and then below here liquidity was also grabbed before price starts moving. Can you see old lows? This place, all this place is filled with liquidity. Can you see price has actually grabbed it here, then it moved in the direction after it has grabbed liquidity. So this is happening time and time again. So the best way to stay away from that is to wait for this kind of thing happen anytime you have an old high before taking a trade. For instance, we have this old high that happened. Now before you can take a trade, make sure you patiently wait for that liquidity grab to happen first. If you have an old high or an old low, make sure you see liquidity being cleared above it before you can join the market. Okay, now you can simply find that in a lower time frame. It is even proper. If I go to my MT4, we're going to see them right here. Let me remove every drawing here. Now look at this. There is liquidity residing above this level right here, liquidity residing, and look at it, price actually came and took the liquidity before pushing down. Now you can see this happening time and time again, liquidity below this area, and then eventually price picked the liquidity, that is the money. All the people that were buying here, their stop losses were right below here, and then smart money came and picked it before taking up. Now look at this. If you are to map out this area, okay, this area is in the 1 hour time frame. If I'm to go to the 15-minute, we're going to see an actual interesting thing around that area. Okay, can you see? If you are a smart money concept trader, you're going to see this happening. Now after the liquidity grab, okay, after the liquidity grab, which was from here to here, price actually came above and we had a change of character here. Okay, we had a change of character. Now you can patiently wait as a smart money concept trader for price to come to an institutional reference point. In this case, we have an order block. Okay, this order block, this is the kind of place we can enter this trade. Be patient, just patiently wait for this thing to happen. After price came in the lower time frame, you're going to see this failure. Price pushed to this level and it came back to this institutional reference point, that is an order block, and this is where we can confidently enter our trade after a liquidity grab. We're going to see them happen over and over again. We have a liquidity grab above this area. This area was full of money and then price actually grabbed it before moving. Let's find another one and then I'm going to show you the last example before I close this. So let's see this in the lower time frame. We're going to see it. Let's go to the 15-minute and then see what exactly is that, so we can see. So look at this. Price came and then it came back to that particular order block at this area. Okay, at this area we have an entry. At this area price came back to test this level. Let me remove everything and show you what I mean. Price came back to retest this area, and these are the places we can confidently enter our trade. We can even have more better example. Even though that did not reach the order block, we can have more better examples, and then you can take trades from that kind of thing happening. Liquidity was taken above this area. Can you see? Liquidity was actually taken, and then we have a return to order block. Let's go to the lower time frame, and then we're going to find that again and see how did it play out. Okay, now coming to the lower time frame, you're going to see it. Look at it in the lower time frame. After liquidity was grabbed above the old high, okay, now price actually came down and we had a change of character right here. As a smart money concept trader, you will look for an institutional reference point. In this regard, we can see a fair value gap at this area. Okay, this is a fair value gap at this area, and price actually came to test and fill the fair value gap at this area. Look at it. Okay, this fair value gap, and this is our entry in the lower time frame. We don't want to enter here, because if you have taken the trade right here from this area, let me show you from this area, you are expecting price to go down. It actually came back and stopped you out because your stop loss is right here, and then we have an old high here. So make sure you wait for a confirmation. Be patient before taking your trade, and then you're going to stay away from any trouble that will come as a result of liquidity grab. So guys, I hope you get this correctly. If you have any question, let me know in the comments. I'll be right there to answer you. Thank you guys for watching. See you next time in another video.